Welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon Haddad.
Another day, another power up, my friend.
Absolutely. Absolutely. We have a lot going on today. The Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. The Sales Pitch, where John helps us become better salespeople. And then we will wrap things up with story time with John. But first, fortune cookie. Gotta start every podcast. How do we go about our week without knowing our fortune? Dreamers carve their path through the unknown.
I love that. That is, these people. These are the people that sometimes they speak and people think that they're crazy. These are the dreamers, the one that have the most wild ideas. And when it says the unknown, it's because there's so much what if to dreamers, right? What if? What if? That's the unknown. What if this happens? What if that happens? And the dreamer says, it's all possible. All of that could happen. It could be good. It could be bad. I'm going to try it anyway. That's the difference between dreamers. Dreamers do exactly that. They dream, and it's very vivid. I'm a dreamer. I love it. I enjoy it. I embrace it. I love sitting in hope. And I understand that there's a lot of turmoil that can come from being in hope all the time. And I enjoy even the turmoil, as difficult as it is, because the growth is just unimaginable. The way you handle situations, the ability to regulate your nervous system. Being a dreamer is a beautiful thing, and I absolutely love that quote. What's your take on it?
Mine is I am a dreamer as well. I have big dreams. I have things that I think about and reassess all the time. And that's what I associate with dreamers are people who are very thought driven and think about the what ifs, think about the future, think about aren't and not in a bad way, but aren't living in the now all the time, but are thinking ahead to where they want to be and continued into the carve their path through the unknown. Like they carve their path by assessing and taking a look at the future and asking them the what ifs so that if those ifs happen, they're prepared. Because it all comes down to being prepared.
It is. It is all preparation, and that's what so many people lose sight of. Is the preparation of it all. God, I love that. Can you take a picture of that one for me?
Yeah, yeah. I mean,
Eh,
how can dreams uh how can you not put time into thought? Like if you have a dream, if it truly is a dream of yours, how can you not put thought into it? Is it just something, oh, I dream of being a billionaire, right? Well, what's the path? There's no that's I guess that's technically a dream, but unless
Yeah.
with you have a path that you're carving.
A dream with no action is just that. It's just a dream.
Yeah,
Let's be clear, right?
that's a good way of putting it.
The dreamers are don't. There's a lot of dreamers out there, but you are right, Tommy. There is an additional step to this where you can dream. There's a lot of great dreamers. There's people that you've probably seen dreaming on the streets, right? And throwing you off. If you ever traveled down Santa Monica Beach
Mhm.
Boulevard over there, I've been down there. I used to live very close by. Yeah, there's dreamers everywhere. And the difference is the ones that are putting the action in place, right? Like, how do I run towards this dream? Sometimes it's a feeling, sometimes it's a chance, but you got to run towards it and you got to have items that you're executing on constantly.
Absolutely. Well, let's dive into the broker buzz this week with our first question. Are conventional loans assumable? I went to an open house and the seller said her conventional loan is assumable. I thought no, but she said that her servicer said yes.
Good question. So no, Fannie Freddie loans are not assumable. That's like a due on sale clause. That's like somebody could take over your current note. Now there is seller financing. Okay, so there is a way to do some sort of seller financing, and then there's opportunities inside of there if it's a portfolio loan. So it can still be considered a conventional type loan, but portfolio. So what that means is like a credit union. uses their own money to fund loans. So basically, the members that are paying in your deposits, they're using those deposits, just like the fractionalized banking system that the United States lives by. They're using those deposits to lend money. They can give different terms in a sense if they're going to hold the note and take the risk. So they're saying, we want to eat this risk. We want to take this on. Then there could be opportunities where a loan is assumable that's not backed by Fannie or Freddie, but still be considered conventional. So no. And then there was some loans, I think like pre-90s, actually, if I remember history correctly. I think it was pre-90s where Fannie and Freddie allowed some of the assumable loans. So unless her loan was also from the 90s, which I do doubt at this point, there may be opportunities there, but no, it's conventional loans are not assumable.
I never really thought about that. Old loan types that haven't come to term yet.
Oh yeah, you don't see them as much anymore.
Because most
it is a
people
lot harder.
refinance or move
Well,
within X amount of years, right?
it is that, but it's also the digital age. So just getting in front of people so much easier than it ever has been before. Where, even when I started in 2013, I got loans from, I saw loans 95, 98. I think 95 is the earliest I saw a mortgage. And that was in 2013, 2014. But now, yeah, I see nothing that old, to be upfront with you, anymore. Most of these clients have been refinanced. So I do think part of it is exactly what you said, just the way the economy has changed and the data about refinancing or selling. But the other part of it is just, gosh, there's marketing everywhere for refinances or to do something with your home or do something of that nature.
Yeah, especially if you had a loan in the 90s, you're probably in retirement age, and then you're probably
Yeah,
downsizing or doing something else.
at this point, you're right, actually, because they have 30 plus years, 95 to now, 30 years. You get the house in your mid 20s, late, early 30s. You're spot on at this point.
Yeah,
You're spot on.
cool. Number 2, can we do loans inside irrevocable trusts?
Okay, so uh, revocable, I don't care. Irrevocable, revocable, doesn't matter. There's
Did I say it
two.
wrong?
No. It's just tomato.
Oh, okay.
If that's what people are going to focus on this, then find somebody else. All right, you can go poke fun of somebody else. We have no idea. It's one way or the other, depending on where you live in the country. But here's the difference, right? A revocable trust is a living trust, so it can be changed, it can be canceled by you. You're the grantor, so I'm granting all this authority. That's revocable. I, Jonathon Haddad, can make changes as I see fit. I act as the trustee. I can it can help me avoid probate after death. That's why a lot of people will use revocable trust. So God forbid something happens to me, as opposed to having to go through the court system. They read my trust. I'm the grantor of that trust. They basically have to do exactly what I say inside my trust because I run and control everything. There's very easy to maneuver and go through. Irrevocable trust. So assets are basically you give up control. So you're saying that I'm going to give up the control as an individual of this trust. And when you do this, you gain protection. So your assets are removed from your estate. And basically, it can help you avoid some taxes after death. It offers stronger protection from creditors and lawsuits, God forbid, after your passing. But with this here, this is controlled by a potential beneficiary. And the only way to change it is by a court order, or some of these contracts allow beneficiary consent. So if there's 5 people part of it, if they all vote to agree to make a change, they can. But it's so much harder to change. Now, why is that important? Here's why. People say, why can you close or not close in a revocable or revocable trust? Here's the lender from their standpoint. I want you to think investor. I want you to think it's your money that you're lending to somebody else. So let's just say, Tommy, you come to me and you say, John, I have we'll use an easy number. I want to secure this $100,000 loan. All right. All right, Tommy, I go through, I check your income, your property, your credit, your assets, all checks out. It looks really good. Tommy comes to me and says, hey, John, I'm good to close, but I want to move this into a revocable trust after I close. Okay, that's allowed. The lender allows to do that. Why? Tommy is in control of the trust. Tommy is the grantor of the trust. The investor, the lender, looks at it just like this. If they close that loan and they decide to move it into the trust, the revocable trust, if the lender, God forbid, something ever happens and there's a bankruptcy or something occurring, the lender can still go after and get that money. It's a personal liability. It's tied to Tommy personally still. In an irrevocable trust, God forbid there's bankruptcy, foreclosure, or something happens, it is way harder to go after Tommy because of all the additional layers of protection. So the investors aren't always going to allow you to close, almost never, an irrevocable trust. Now, some people will say, well, John, can I just put it into one after closing? So we close normal, Tommy closed in his name, and then he goes and he gets the title change to move into the trust. The answer is you can, but there's a clause in all lender documents. This is for every consumer out there. When you sign this document, there's a clause that says if you move it to certain trust, if you move it to a LLC, your house, if you move it to a revocable trust, they don't always do it, but they can come ask for the entire amount due in full. That is in the agreements that all clients sign. So you have to be very cautious with the risk you're willing to take. You have to make sure that you explain it to the client so they understand the why. You can't just upset clients. Are there some portfolio private loans that don't mind it? Of course there are. Are there people now that probably have it in a trust this way? There is. And are they going after all? No, they're not. So it is a huge risk. You do have to be in front of it, but you have to also understand the key differences between both trusts so you can educate the consumers. That is how those work. I hope I explained that in the best light possible.
Yeah, no, it makes sense. It's when you do that, it's changing the risk for multiple parties, and that changes the agreement because that's not the risk that they agreed to.
That is correct. Like people will use irrevocable trust for estate planning, asset protection, certain like benefits can be leveraged through it. And the other side of it is for just the standard revocable trust, you have a lot more control. You keep control. You're basically overseeing your assets inside of the trust and can still avoid probate, but you're the one in control. So it's a little bit different from a risk standpoint. That's basically saying my asset is controlled by this specific trust. Well, the lenders need to know how that specific trust works.
Got it. Cool. Number 3. What's one mistake you see new brokers make often?
Not asking deep enough questions and then being confused on why they're getting shopped. Okay, so let me give you the power of a strong question is a very misunderstood concept nowadays. And I want to give you a perfect example of that. And I'm going to try and relate it to marketing, Tommy, the best that I can. Okay. And I hope I do a decent job. So bear with me here. Bear with me. So if I were to say to you, Tommy, can you give me a basic understanding of SEO? Would you be able to do that pretty quickly?
Yeah, absolutely.
All right. Go ahead. Give me something.
Search engine optimization. For your website, you're going to be putting keywords onto your pages. And specifically, what's been working recently is adding questions because people Google search questions. So the more questions and FAQs and more keywords you have on your website, the more likely you are to pop up when people search for those terms.
Now, see how he crushed that? Now let me explain. Now, that's a basic question everybody would ask a marketing person. Now, how do you take that further so I become more memorable to Tommy? Okay, ready? Tommy, I'm sure you have a basic understanding of SEO like a lot of marketing people, but here's what I'm more curious about is your opinion on the impact of SEO and how ChatGPT will change the way things are compared to how they've been leveraging Google. Now, Tommy, does that question require you to think more?
Sure. Well, we're doing a comparison now.
Now, but it requires you more thought, right? Mm-hmm. It requires you to go a little bit deeper into the bag. It requires you to go a little bit back, and now you're taking part of your narrative, part of what you've learned, and now you're going to formulate something and bring it back to me. Mm-hmm. It's the same thing on the mortgage side. So the difference is this: on mortgages, we go in and we ask a client, we say, "Are you shopping rates?" "Yes, I am." "Oh God." All right, basic question.
Yeah,
basic question. Hey, I know rates and fees are important. I really do get it. The reality is the transaction is going to end the second you sign the documents at the closing table. So besides rates and fees, as you walk through this house, what did you love about it for you and your family? Why did you feel like this was the perfect house for you and your family?
Oh, I just love the kitchen.
See, now you're building. It's a pattern interrupt. You can't just answer with a very basic question. You can't just answer with, I'm sorry, a basic response.
Yeah.
You have to go deeper. So start asking deeper questions. When a client says, I want to shop, I want to talk to my spouse, I want to wait, the market is it, we panic and go, okay, I'll call you back in a week. No. Hey, what are you waiting for specifically when rates drop? Awesome. What difference in payment does it have to make for this to make sense for you?
Yeah, you get more context to how they're thinking and how they're answering, like why they answered that way. Like you can ask it, like the horrible thing to do is just ask simple yes no questions where they can just get away with responding yes or no. And
Don't keep going, Tommy. You're spot
you
on.
get no context, and if you don't add that layer of context into your question, you're not going to get it in your response.
And the crazy part is, Tommy, like you can GPT this. That's what I do now. So go into GPT, y'all, and just say, hey, I'm getting these responses. Clients are asking me for rates. Clients are asking me for fees. Clients are shopping me. I want to be different and I want to ask deeper, more meaningful questions to get clients to think deeper about the conversation. What are some questions I can ask that are deeper than what rate are you looking for? That are deeper than do you like this house? That are deeper than how long do you plan to live here? And ChatGPT will give you a massive list of these questions. And then it's your job to be patient and to listen and to learn where to take the conversation next. John, I don't know where to take the conversation next. That's called practice.
And I
And
do
that's
have a little. Yep, go ahead.
no, please.
I do have one more marketing tip before we get too far away from it. Do not focus on SEO for ChatGPT. It is years behind. Not in its technology, but it doesn't crawl the internet as fast and as often as Google does. So if you are
You
using Google for SEO, use SEO to rank on Google, not to make answers in ChatGPT.
do y'all see what he just did? Okay. Do you see how it was sitting in the back of his head still the
Oh,
entire time?
yeah.
But you see my point to
Yeah, I
that?
wanted
Like,
to answer more.
yes.
I needed to give you more information because it was killing me not to say it.
If you don't clip this part of this, it's not one of our clips, man. Like this has, that's exactly my point. Is you're tapping into something that you already love to do. Like I'm talking to somebody that is a creative that loves the environment, that's deep and deeply rooted. So you have the emotion tied to it, and your client as a loan officer, think about the emotion of potentially buying a home. Think about the emotion of potentially refinancing. John, it's not that emotional. Bull, you know what?
If you told me that I could refinance and save, I don't know, what's the average saving on a refinance? A
It
couple
just
hundred
depends.
bucks?
Cash
Yeah.
out, doesn't
Yeah,
matter
it
what it
depends on
is.
the
Yeah.
percentage of the house, but say I save 3% on my mortgage payment. That's pretty exciting. Like it causes emotion out of me for sure.
Yes, but it's the way we explain it. Some of us, and this isn't all. I know it's a general statement, but some of the LOs, Tommy, that's exactly the issue. Is we're jumping into conversations not thinking like that. We're not that excited. You know, I used to love telling clients this all the time, and I get it. Got to make sure cost is effective and yada yada and all that. And I understand. I know it's important. But here's what I tell clients: I'd save clients $80. Let's just say I save someone $80. Yeah, you know what? It's not worth it. Tommy, you know, I'm not going to pretend like I've never heard that answer before, but let me ask you this. Who do you use for your phone bill?
Verizon.
Verizon. If Verizon called you and said your phone bill is going up $80 every single month, would that bother you?
I'd be pissed.
Okay, you'd be frustrated for that. But because it's correlating to a phone payment,
Yeah.
it's making it more frustrating to you. But when it comes to your mortgage that you're actually paying the most amount of interest, you're saying it might not be worth it. And I just want to explain to you how that $84 can be leveraged by you taking the 84 or $80 I'm saving you a month and by applying it to your principal every month after we close and making the same payment you make today.
Yeah, it's about the long game. You have to the context of the long game. It's not like I recently paid one of my cars off, right? So I that was a $338 payment that I'm no longer making. Where I was just like, "Oh, it's not that bad of a car payment. It's only like compared to what car payments are going for now, the average car payment, like that's not bad." So I felt good about it, paying that every month. But when I got to stop paying that, that felt real good too. So it's just one of
but
those
but
things where it's the context of, "Oh, it's not so bad, and this is the light I'm putting it in." But It actually was.
That's the snowball effect,
Yeah.
Tommy. And that
Yeah.
that's where it's our jobs as professionals to help now you get it, right? You've gone through it before, whether it's your life, your experiences, the way you and your wife have conversations with each other about the family and the household and how we're going to take care of bills. You obviously, to you, it makes sense in your head. You're like, oh, snowball, avalanche, we can build on it. I take that money, I reinvest it. Now, not everybody thinks that way. Because if I'm talking to Tommy every time, I'm happy as hell. Tommy's like, yeah, this totally makes sense for our family, right?
Yeah.
As long
Yeah.
as you're very number specific. You're looking at it on paper, makes sense. You understand your cost, it makes sense to you. Your recoup makes sense. It's our job as LOs to get them excited. So what's a mistake people make? Not being excited, not asking the deep questions. So I love that one. I know we hammered that one home, but that's
Yeah.
a really important one.
Absolutely. Well, if you want your question read on the Broker Power Up, become an AIME member. And how do you become an AIME member? You scan the QR code on the next ad if you aren't already. If you are an AIME member, when you post in the Brokers Are Best Facebook group, make sure to use hashtag Broker Power Up, and we will get your question answered. So we'll see you on the other end for some sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
And we're back. All right, John, how do I become a better salesperson?
So this is Dale Carnegie, Connections Before Conversions. And he's a legendary salesperson, obviously. But one of the things that he says, he's quoted, he says, you can make more friends in 2 months by becoming interested in other people than you can in 2 years by trying to get people interested in you. And nowadays, this goes so much deeper. In the book, he talks very, very. So the book, just so y'all know, it's How to Win Friends and Influence People is the name of the book that he wrote. Legendary book that many salespeople have quoted and commented on for many years. So inside of there, it's about how to connect with people. And you got to realize when this book was written, there's no social media, there's no ability to text and interact constantly and consistently. It was even harder to learn about somebody. Things were a lot more private than they are today. And even business people were much more private than they are today. But now you can't really hide from anything. It's all over social media, and who you are as a person is going to come to light. So the first step of this is lead with genuine curiosity. If you're talking to a real estate agent, a client, you have so many opportunities, whether it's LinkedIn, whether it's Facebook, social media, whatever the case might be, you can do your research. You can figure out who this person is, what they like, and you can help build the confidence to go into a conversation with them to understand alignment. A lot of times the initial conversation with people is figuring out if we're aligned, right? Are we aligned as human beings or not? But now you have the opportunity to connect with people early. And it's really important when you connect with people. One of the things he says is use their name often and early. So people love being acknowledged that way. I know I do. It feels good. It feels like the other person's engaged, they're listening, whatever the case might be. This makes them a much better communicator. Now, is there a fine line between sales and somebody trying to take advantage of sales? The answer is yes. There always is. I'm going to assume most of you, I'm not going to say all, I'm going to assume most of you are good people. And this is about genuine connection. This is about genuine interest in somebody else. And it's not hard. It's just you have to truly take a step back and be willing to listen and to care. So are you genuinely curious about the person you're talking to? That's the first thing, is connect. Number 2, listen more than you talk. Understand the real problems and values. 80-20 rule is what you want. That's what Dale Carnegie talks about. If you're doing more than 20% of the talking up front, you're putting yourself in a bad position.
Yeah, and I think genuine is the key word here.
Genuine.
Because people can know when you're not genuine and you're just asking for.
And that's the deep questions I was talking about. That takes time. That takes research, Tommy. Right? It takes a lot of research. It takes a lot of effort. It takes a lot of just mental fortitude to be able to learn how to do all that and practice all the time. Because you're right, people can feel it. If I said, Tommy, tell me about marketing.
Oh, I'll get all excited and I'll tell you all about it, and you'll probably need to tell me to stop. So
Yes.
when you ask me about things that I'm genuinely interested in, and you add enough context to the question that makes me acknowledge that you've done at least a little bit of research before, and so it's like that. Did you just come and ask me, or did you spend 5 minutes googling something before calling me?
Yes. You're nailing it. And this is part of it. So step 1 is lead with genuine curiosity. Step 2 is care, listen more than you talk. And then step 3 is convert, present through their lens. This is where you share stories, you share stats, you speak their language, you mirror them, you understand the way they're having conversations. If they're more mellow and monotone, it's okay for you to make your adjustments accordingly.
Yeah. No, I mean, I'm mid-30s, and it's it's a time in your life where it's hard to get together with friends and do things regularly. But I can tell you it's a lot easier for me to reach out to a friend who was like, "Hey, I really want to play this game with you," and play that game, compared to, "Hey, here's a game I found. I'd like to play with you." It's they already sent the invite, so follow up on that, opposed to that's the listening and looking into the game a little bit and then wanting to play with them and making educated questions, or uh, just being genuinely interested in what they're interested in, opposed to forcing what you're interested in on someone else.
And all of that's through the power of questions. It's y'all, it's a 3-step approach. It's connect, care, convert. Connect, care, convert. That's what Carnegie talked about. And one of the areas that Carnegie that I loved is he hated arguments. He never wanted to go down the path of arguments. He actually tried to avoid arguments at all costs and just learned how to pivot through them and how to have the direct conversation. So there's a way to do this. There's sales strategy, there's method. Give yourself framework. It might not be this, but at least start somewhere. Connect, care, convert. Do you have a methodology? Do you have a framework on how to go into sales conversations? If you haven't read the book, it's a really good one. It'll also help you understand other people when they're talking to you. I love to be sold. It's one of my favorite things in the world because I just pick up on all of it and it doesn't bother me. Like, that's a skill. It's an art form. It takes time. You know how much effort, you know how many hours I've put into learning how to do this stuff? And I still got a lot more to learn. There's still people that know it way better than I do. So that's today's sales tip. A little Dale Carnegie for everybody today. And it's just about improving your craft. It's just about finding different ways to build your craft. It's just about making sure you're in front of people constantly. Connect, care, convert. Do some more research. That's our sales tip.
Cool. Well, I have a great place where you can do more research at the end of October. It's called Fuse. So, if you would like to become on the wait list, or possibly something that may happen, and claim your tickets, you can scan the QR code on this next ad, and we'll see you in Nashville this October. And on the other end, we'll have Storytime with John.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, and we're back. And I'm going to throw one little tidbit onto that Fuse promotion. If you have not claimed your hotel room, you should do that. The link is on that page from the QR code, and hotel rooms are booking up fast. So make sure you secure yours so we can see you there. And John, the floor is yours for story time. I'll see you on the other end.
So today's story is actually the one I told at UWM Live. And I'm going to bring it here today. And it's the never-ending story of Netflix and Blockbuster that I'm sure all of us are very familiar with. But I want to explain it through my lens. This story is about adapting. This story is about finding new ways to do things. It's about getting out of the mindset of, oh, things used to be great back in the day. The market doesn't wait for anybody. The market moves with you or without you. The other thing about this market is it's exactly that. It's your market. It's not a tough market. That's not real. Market is subjective. It has been every single year for as long as I can remember and much longer before that. It changes accordingly. It's different. There's opportunity every single year. So it's a tough market mentality. It's got to go. This is your market, my friends. Blockbuster and Netflix. The year is 2000. I am 9 years old. PlayStation 2 had just come out. I believe it was March or April of that year. Now, my brother and I, we had the PlayStation 1, and we were so excited for this PlayStation 2. So we're like, we got to get it. How are we going to get this PlayStation 2? We knew we can get it around Christmas time. So my brother and I start working in the summer. We're going door knocking, cutting grass, taking out trash, doing any kind of chore we could do to just get some money. And we knew that we'd have the opportunity to get this on Christmas because we helped pitch in. We were getting really prepared for it, just talking to our parents about it. And we were very excited, very happy, ready to get this. Now, one of the things we didn't have was a video game as part of this process. There was no video game. So down the street from me was a Blockbuster. Not far away, probably a mile and a half. And I knew we were getting the PlayStation 2 at this point. So it's getting closer and closer to Christmas. My brother and I are through the roof, so excited. We are ready to play Christmas Day, but we need this video game. So about 10, 12 days before Christmas, I'm calling Blockbuster. Now, we had the landline phones, and at the time, Blockbuster, we had the caller IDs. Blockbuster would have the number saved. I had not gone through puberty yet. I was 9 years old, and my voice would crack very often, and every time I called, they'd say, Mrs. Haddad. Nope, not Mrs. Haddad, it's Jonathon, but that's okay. And we'd always laugh about it, and I'm young, and they knew me at this point. We got to go up every, once in a while. And I said, there's a game that just came out. And the game that had just come out was NHL 2001. My brother and I played hockey for many years, and we wanted to play that game. We were like, we're going to play it on Christmas Day together as a team, as a unit. So I call. They're like, Mr. Haddad, we don't have it. I'm like, oh no. When is it supposed to be returned? They said it should be returned tonight. So I call back later that night. They still don't have it. I call back the next day, and that person did what I did. They took the late fee. They just took and accepted the late fee, and I was devastated. I'm like, oh no. It's all right. Probably find another game. We'll rent something. This is 9-year-old drama, which, by the way, I miss 9-year-old drama. That was way, way less drama than the drama I deal with today. I'm sure a lot of us feel that way, the nostalgia of it. But I was devastated. So I'm calling every day. Every day they're telling me no, 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 no. Finally, about 4 days before Christmas, I make the phone call, and they say, the game is here. What? Mom, the game is here. Let's go. My mom calmed me down because she just didn't move at that pace. She said, we move at my pace. We got ready. She picked us up. She took us. We rented the game. We came back, opened the PlayStation on Christmas Day a couple days later, and played NHL. Now, Blockbuster lived on the fact that they thought that emotion would be what wins people over till the end of time. They said, the emotion of that 9-year-old kid. There's no way we're ever going to go out of business. There's no way that's ever going to change. Did you see that? That kid called every day for 5 days. We get thousands of those calls a week. High five all around the board. Executives high-fiving. Millions and millions of dollars being made. Such a profitable organization. And then Netflix comes along, and Netflix says, we have an idea. Blockbuster, we all know the story. And now, I don't know about all of you, as much as I love that moment, and I will remember that moment for the rest of my life, I love being able to just jump on and grab a movie and just click a button and it starts playing for me. Not having to deal with the scratches on the disc. Remember trying to clean the disc when you rented them? That was the worst, renting a movie and then having it skip midway through because somebody scratched it and you got to go back. You're missing parts of the movie. I remember that feeling too. They didn't think about that pain. They didn't adapt. And to take it even further, it's real easy to download games now too when I get the time to play. Just do it online. I don't got to go nowhere. I click a button. Here it is. Have a great day. So are you willing to adapt? Because Blockbuster didn't die because people stopped watching movies. They died because people stopped adapting. And Netflix, it's not like were they the best at marketing? No. They saw the future and what was coming next, and they moved faster than anybody else. So I ask you, do you see the future? I do. It's black and white, my friends. It's AI. It's machine learning. It's advancements in technology. That's what is coming up next. So what are you doing to adapt to it? Or are you living in 2020? Just waiting for the market, waiting for things to get easy. I love to adapt. I love to think about the future and to be challenged to make changes as quickly as I can. And I challenge you to do the same. That, my friends, is today's story.
Man, I love that story. It's a good story.
Thank you, sir.
Blockbuster was also a pivotal location for my brother and I growing up. And the amount of Nintendo 64 games that I see that just say property of Blockbuster at the top. The sticker wasn't taken off when they went out of business and sold everything.
I remember when they went out, man. It was wild. It was wild. Mm-hmm.
I was like, what do you mean? I have to buy the whole game? Because there was that time where it was just not completely, you could just go buy digital games everywhere.
Yes.
For consoles at least. But yeah. No, adapting is so important. Otherwise, you just become irrelevant. And then you could have the best marketing in the world. People aren't looking for you.
It doesn't work.
If you don't have an audience, you have no future. So you have to find that audience and you have to provide value to those people. And to provide value to those people, you need to know what they find valuable.
Mm-hmm.
So, if Uh, Anything else before we call this a podcast?
No, sir. That is it for today.
Cool. Well, thank you for tuning in to this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to the YouTube channel and ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.
Take care.